Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Friday, everybody. All right, so as always, time to caffeinate and dominate. We'll take a look at what the markets are doing here Friday. Remember, we just had the non-farm payroll data come out, and jobs, kind of a big deal. Second mandate for the U.S. Central Bank. And so while they're focused on inflation, they also have the second mandate of jobs, which is actually pretty unique for the G7, G8 central banks. So yeah, when we get jobs data, it's kind of a big deal. And if you notice, we'll take a look at the intraday chart in a moment. Today is this type of day where a lot of opinion is going to be focused. It's going to be concentrated on that 8:30 a.m. hot zone, and what a hot zone it is, right? So what's a hot zone? It's scheduled. We know it's coming. It's guaranteed to be a needle mover in terms of at least near term, maybe slightly longer term sentiment. It's going to be a very volatile event. If you're a Forex trader, as I have been for 2 decades, hot zones rule your world, and I take a look at the Forex Factory calendar, and I actually cue in on the color of, you can see here this column of, I don't even know what kind of icon image that is, but we have the red hot, which is what non-farm payroll is. We have sort of the medium heat hot zone, and we have the yellows, right? When we have red hot zones, we have to keep an eye on those. They're going to be volatility events, and when it's a volatility event that occurs before the 9:30 bell, remember that equity players and equity options players, this includes ETFs, can't really do anything now. They have to wait take a look. They have to wait another 28 minutes. So what that means is there'll be a little bit of an echo effect potentially at 9:30, where what do we have? We have a 553 job increase expectation. We got 210. Now, how many of you already know? Well, also take a look at the average hourly earnings, downticked, and then the unemployment rate, downticked too. So just looking at the headline number, which is this right here, how many think that we're still in a bad news? And that's disappointing. 210 versus over 500,000. That's disappointing. How many of you think that the initial reaction is going to be up? You're absolutely right. The initial reaction is typically going to be at 8:30, up. And then what happens? Non-farm payroll, if you've ever looked at the entirety of this behemoth of a data release, is the headline number of what that jobs number was. Then we have also looking at the unemployment rate. Then we have the wage number. And then you can start to break them down according to sectors and get a little bit more granular data about where those jobs either increased or contracted. So what I mean by that is it takes some time for the markets to even process all of that. So when non-farm comes out, you're talking minimum, aside from the headline release, which reaction, which is right at the release, less than 60 seconds. You've got an elongated event to up to about 12 to 15 minutes for the market to sort out what it is it feels about this number. So don't be surprised about 10, 15 minutes in, all of a sudden we get a secondary reaction, and you can see that right on the dot. Right? So then after that, the markets can look at it in its entirety and make a decision. So now, after 9 a.m., 30 minutes, we can start to see how the markets really feel about what has to be a mixed bag for today's jobs number. All right, that's the way non-farm payroll is processed each and every month. And again, keep an eye on the calendar, because this is likely going to be the mood that is now preset 1 hour before the bell. And that's how we're going to see our reaction. All right, so as always, our charts and coffee are about you and your questions. So now that we have non-farm out of the way, let's go ahead and tackle first request. Ark, yep. I see all the Kathy Wood memes again, and I'll tell you what, I don't know why people like to pick on this woman. Um, I think you look at the stock price or the ETF price, and somebody asked me, is Ark potentially a buy? So, in fairness, if I ever pull up Ark, Michael, to pull it up on a daily probably does not do uh, Ark justice, and actually does not actually reflect what Kathy Wood says about her time horizon. So anytime I look at ARK, unless I'm going to trade it, which I try not to do too much of, unless I'm going to trade it, I look in a weekly time frame. And there's nothing about this that doesn't look like a really nice oversold opportunity to buy. Now, if you are trading it, it's potentially a short on the rip. So I don't know what your time horizon is, Michael. And a lot of times, and let me just say this because we have so many, so much analysis out there because of the wonderful interwebs. And we have so many different opinions about what different symbols are going to do. Heck, even within Simpler. One of the easiest ways, and I'll tell you this because I've been there frustrated in terms of, you know, this analyst that I respect or trader I respect is bullish. The other one's bearish. The other one's not even paying attention to it. What am I supposed to do as I'm learning all this? So the first thing that I would always ask is, what's the time horizon? What's the time frame? And you'll notice that oftentimes differing opinions about the very same symbol really aren't necessarily that different. It's that the time horizon. How long do you anticipate the move to take to go in your favor? Or how long will you give that move to, how long will you give it to let it happen? And what time frame you're watching to determine what you want to do. So if one trader is looking at a 5 minute and the other one's looking at a 30, may not seem like a huge chasm, but it actually could be a very different duration and set of indicators and signals in those two intraday time frames. And heaven forbid, now it's out to a daily or a weekly. So anytime you're feeling a little frustrated or not following analysis or feeling you're getting conflicted analysis, just stop for a moment and say, all right, I'm going to ask them, what's your time horizon? What's your time frame? And I'll tell you instant clarity. And ARK is such a great example of when we need to stop and say, Kathy Wood says she's playing a long game. Let's measure it with that ruler, right? So I hope that makes sense. Next up, hey there, Tim. Good morning. Thoughts on entering IWM? Sure, let's jump on over there. So if we're looking at IWM, I'm going to pull up the Russell, right? So thoughts on entering IWM futures. Thoughts on entering with the 17, 220. What is it? Is it at 21 Jan? But anyways, the January expiration, 220 calls. 50%. Now, all my cards on the table. I'm in this trade. I'm in KRE. I'm in IWM. Even though we had that kooky move to the downside, I hung on. We bought very inexpensive options in the Mastery, KRE, and IWM, and we're pretty much just barely. We're right around break even and maybe up a little bit negligibly. So it's not a big red on our P&L anymore, but it's not a huge win either. It's not a significant move in order for me to get out. What I will do is I have to recalculate what that halfway mark is. And it's now down just below 2,300. So that halfway mark basically puts me at the middle line of the wave and also right around 2,300. So we'll step out in front of size around 23.99, 23.98. So I've ratcheted down because of that lower low, but I'm still long calls. I've ratcheted down that initial target to stepping out in front of size 2,300. No longer that 23.50 and 23.16 target that we had when we were expecting, in fairness, the market to hold the 200. Getting back above that 200 day before yesterday was huge, right? That being this very important line in the sand. Please know that the Tech 200 is an indicator that transcends technical analysis. It really is one of those things that people who would never consider themselves technicians, they still know where that 200 is. Hence, the popularity of golden crosses and death crosses, where, say, a 50 crosses the 200. People know They know, even if they wouldn't consider themselves technicians or that reliant on charts. So we're in, and I'm still in on that one, Tim. All right, next up is good morning. Good morning. Would I touch on currency strengths and weaknesses? Hey there, Les. Sure. So to do that, we go to Finviz, Finviz. Love this site. A lot of you already know they have a terrific screener, and they have a really cool Forex performance, relative performance chart graph. So if I'm looking at today as a day trader, I mean, it's only 10 after 9. I'll look at it again at 9:30. I'll look at it again around 9:50, 10 a.m. Eastern, just to see what the alignment of these are. It's hard to be bearish. Not that the markets can't go, not that equities can't go down, but it's hard to be bearish when we have weakness in the yen. I would say this is a conflicted relative performance because I'd like to see the Aussie up here. I'd like to see the Kiwi up here. The Canadian dollar already is. I'd like to see the franc, Swiss franc, down here giving the yen company. So there is an alignment. There is sort of an idealized alignment of currency strength and weakness that would suggest if the equity markets are more aligned with a risk off or a risk on, I would say this is moderately risk on, meaning traders are willing to buy stonks, that it should be bullish for equities. So I hope that helps. All right, moving on. Can we take a look at the cost of Lulu? Lulu, sure. All right, so looking at Lulu, look, it's not the same trend that it was, say, in July and August, but it's certainly not a short. So that's a potential minor low. Keep an eye on getting above 454, 455. That would be really, really important. Yeah, I would definitely look at that. So I don't have an IBT. I don't have an IBT layout yet. I have to build that out. IBT. I don't even have that really set up at all. So maybe next week, Jaylon. I don't have IBT outperforming stocks. So yeah, I'd have to pull that up separately. Maybe next week. Just hit me up next week, my friend. All right. Next up is, what do you think of Facebook? Facebook's in a tricky spot, Andres. If we look at where Facebook is, this is the problem. Facebook is the number one weighted name in the XLC. XLC has not been great. IYZ, your telecommunications, has been practically toxic to the XLE, considering how many stocks are in telecommunications and how many stocks are in communications, and they overlap in the high concentration weighting. My thought with both of these, and this is where the tone that we have in January will be distinctly different than the tone that I have in watch list building and expectations for sector rotation that we'll have in December. December is not the time to look for rotation, which is to say, looking at outperforming sectors of the market and looking for profit taking that would benefit sort of the dumpster fire corners of the market. That's not what December is about. December is about what's strong, let's keep buying it. What's weak, let's dump it. That's also concentrated. That second sentiment, dump what's weak, is also part of the psychology of tax loss harvesting, the tax loss selling. So if I'm seeing something heading lower, December is never that time to go bargain hunting, because there's a potential likelihood that it either stays low or might go even lower. But come January is akin to ringing the dinner bell. Come January, if it's a weekly time frame, by the way, I talked about time horizons earlier, right? If someone said, Rog, I've got a 6 month time horizon, I'm willing to put Facebook in a longer term portfolio, and I'm willing to wait. And I've got that longer duration tolerance. And it will earn a spot on my roster if it can survive, but it's going to have 6 months to do so. I like where Facebook is on the weekly, if that duration of that time horizon is longer. So this is where once again, I think time frame and time horizon are really going to play a huge role in what it is we individually may want to do with Facebook. And I would say I'm probably not all that keen on it through December. And come January, I'll be a whole lot more interested in XLC, IYZ, and anything that's been heading lower the last 2-3 months. So uh, I think when it comes to the Nasdaq, you know, ignore what's happening in ETFs and their absolute disproportionate influence on what's happening in the indices. This is something that has been growing in popularity since '08, because ETFs have been growing in popularity since '08 easily. And this ETF phenomenon is going nowhere. It's really in the early stages of still its development. We're seeing the popularity of actively managed ETFs growing. We have these niche ETFs that are continuing to increase in volatility. I mean, ETFs are an exciting corner of the market. That's a big reason why we started Sector Secrets. But this is where a lot of traders want to get, and I see it out there, they want to get analysts too. You see it on FinTwit. They want to get cute with their own little weighted views of the market. That doesn't matter. ETFs are telling you this is what's weighted. This is how it's weighted, high concentration weighted or not. And this is the impact ultimately on the index. So Facebook and NASDAQ, there's something in between, and it's called XLC. So we don't draw a direct line to Facebook from the NAS. From the NAS, we go to the XLK. We go to the XLC. We go to the XLY. We start looking at relative outperformance. It broke that large index into 3 pieces. Then we can break those 3 pieces into their individual heavily weighted stocks. And that's where a lot of traders who are out there still looking at equally weighted indices, still looking at creating their own little niche type index view. We don't have to do that. The work's already been done for us. The volume is here. When the volume is, that's where the opinion is. I hope that makes sense. So I don't draw a line there. XLC is in the middle, and XLC is telling me, be patient. So I don't really mind that Facebook isn't participating. NAS has been doing all right without Facebook participating. Does that make sense? I hope I answered the question. So remember, the NASDAQ can rally just on the stability of XLK and XLY, or I should say the stability of XLY and the relative straight up outperformance of XLK, which is when we did the free video, which you can check out at the Simpler Trading YouTube channel. And I said, look, there are corners of the market that still look very good. NASDAQ looks solid. XLK looks great. SMH looks great, right? And you might have caught that video. Take a look at that. It should explain at least what's going on in my noggin, right? And then see if that resonates with you. All right, next up, are not the SPX options available overnight now? Larry, oh yeah, I mean, you have options on futures, ES futures, SPX. Yeah, so the broadest group, though, is going to be stock and SPY. But absolutely, I'm a futures trader and a Forex trader. But remember, I'm not looking at the exceptions to the population of traders and investors. I'm looking at sort of the generalized rule. And that is most of the activity that we will see, especially in the US, being as stock-centric as we are, most of the opinion is going to hit after 9:30. I don't know that there's a lot of Forex and futures traders active at 8:30 taking advantage of it as compared to probably the far larger group and the much larger attention that's going to be given to the 9:30 reaction as opposed to 8:30. So I hope that makes sense. But yes, there are a number of ways, Larry, that you and I don't have to wait for 9:30. We can absolutely take advantage of moves at 8:30 through a number of tools now, Forex, futures. And then we have a number of, now that we have 24-hour. Someone said, I guess Steve Cohen, who I know people have mixed emotions about the guy, but they want to have 24-hour stock trading. And a lot of people freaked out. Oh my gosh, 24-hour stock trading, that's going to be so awful. Thinking to myself, there are already nearly 24-hour markets. Futures, Forex, bring on 24-hour stock trading. Not that I want to trade all darn day. No way. But I would love to know that if I place a stop in the market and there's some decent liquidity, or if I want to execute something in Asia, or I want to execute an idea in the European or the early US session, I have access to the market. So yeah, there's one hand of, oh my gosh, we're going to create more stock trading addicts. But for me, it's not an addict issue. It's an access risk management. I hope it happens. And I tell you what, it's inevitable. So you're right. We're heading towards that. Absolutely. And just like that, we are flat out of time. But just real quick, XLY, Battlehawk, I'm bullish. Santa Rally, Eric, close after Christmas. But right now we're in phase 2 of the year-end rally, and I'm with you there. David, jury's still out on crude. We had the OPEC meeting yesterday. But I'll tell you what, if you're looking at the minor low, and I think I described this in yesterday's free video, we're north of that. Talk about being able to trade 24 hours and have access to CL, where the minor low is done. And I'm almost positive I covered this in the free video, so go check it out. We have completed that. So is it time to get long? The minor low is completed. Yeah, the minor low is completed. Gypsy ITB, I like it for a pullback. XHB too. XHB too. I don't want to touch Chinese internet stocks. No, Bilal, maybe K-Web and MChai and Baba sometime next year, but I do not want to get anywhere near these, especially in December. Ask me again in January, might be a different conversation, right? Might be a completely different conversation. But please stay away from bottom picking and expecting sector rotation to benefit weak names in December. Very different mentality. Thank you as always for being a part of Charts and Coffee. Have a great Friday. I'll see y'all on Monday. Be good to each other.